Good day, ladies and gentlemen. Welcome to the show. Listen, I'm glad to have all of you guys here. Now, today is Thursday, June 6th, 2019. And toward the end, I'm going to go through the markets real quick. And then toward the end, I'm going to talk about these trade tariffs, what the Fed's doing, and there might be a big problem. Okay? So let's get started. Let's open up the charts right here and let's take a look at the silver price today. You know, we were riding kind of high there, but we're starting to drop off just a little bit now. We're up 10 cents on the day, $14.89. She's getting up toward $15. Now, you know, in this kind of an atmosphere that's slowly starting to come around, everything's starting to come around a certain way. In this kind of an atmosphere, we're going to change to a bullish. Gold and silver are going to go bullish. It's not long now before they go bullish. And the reason why I say that is the Fed is changing their monetary position. They're from raising interest rates, they're getting ready to start lowering them. This is going to make gold and silver go bullish. Along with, they're going to have to start some sort of monetary stimulus program. When they start this monetary stimulus, gold and silver are going to go bullish again. And it's been ready. It's been ready for this. It's been preparing for this for a long time. We've had this market malaise where gold and silver have been suppressed for a long time. They're like a coiled spring right now. And we're down near mining production costs. All of the things that made silver attractive are still there. When silver went up to $50, all of those things. But you know the difference in our buying power now, between now and back when silver was $50? Your dollar would buy an awful lot more than it does now, back then, when silver was $50. Now your dollar buys a lot less and silver's a lot cheaper. This is not going to last. Let's take a look now at the gold price today. We're looking at $1,333.70. You know, we're back up above $1,300, and that looks good. The next breakout point, the next big point is to pass $1,350. That's the next milestone. We need to pass $1,350. Let's go on with cryptocurrencies today. Now, the cryptocurrencies took a huge ride up in price there last month. Very exciting. But now we're looking at 251.1 billion. Let me just refresh the page and see if they're going up or down. 246. So right now they're falling in price right now, cryptocurrencies. They've started to drop this morning right now. I think that they could settle in down around the $7,000 price, 6,900. While they get ready to go into the next leg up, they could actually go down a little bit in price. And so this doesn't surprise me any. It's just making for a little bit better buying opportunities. Bitcoin dominance at 55.7% today. And we're seeing the price of these coins drop down. Litecoin's $102. Ethereum's $244. XRP is 39.8 cents. Bitcoin Cash is $387. EOS is $6.28. And so on. Those are the prices of the coins today. Now, the prices are drifting downwards today. Let's take a look at Bitcoin itself. Let me refresh the page. It was $78.39 when I turned the charts on earlier. Now, the price is $77.01. So the price is dropping today. We're going to see I'm thinking it could go down as low as maybe $6,900 before we get ready for this next rally upwards or this next leg upwards in the next couple months, 2 or 3 months, you know. Bitcoin's not going away, folks. It's here to stay. Bitcoin and all the cryptocurrencies. And they are positioning themselves to be the money of the future. Let's take a look now at the Dow Jones Industrial Average. Now, I'm going to refresh the page right here to see what it's doing. It's up 25 points on the day. This rally has everything to do with Fed policy. You know? and the Fed actually talking about lowering interest rates. They haven't lowered interest rates yet, but I expect it's coming. They haven't got that much room, really. They only got up to 2 point something. They never got up to being able to normalize interest rates for this next recession. And if they already start lowering these rates before the recession even starts, what room are they going to have left when the recession actually starts to lower interest rates? They're not going to have any room. They're using up their playroom now. They're using it up now. And if this doesn't work, then what are they going to do? It's going to go from zero interest rate policy into negative interest rate policies. Let's take a look now at crude oil. Crude oil's 51.66. It's down 2 cents on the day. That's a very slight decrease in price of crude oil, but this is for sweet light crude. It's getting down near the $50 mark. Could it go below $50? Well, we're going to have to wait and see. But the United States has become the awful big producer of crude oil. Something else I seen this morning is the Chinese leader, Xi Jinping, and the leader of Russia, the two have become much closer than they ever have been before, right now. They're moving closer on, they're basically becoming buddies, Putin and Xi Jinping. And I saw that this morning, and I found that very interesting, how during these trade wars, how China and Russia it's pulling them together. It's pulling them together. Meanwhile, what it's doing is creating a rift between the United States and China. Let's take a look at the Treasuries today and see what they're doing. Now, we're in the middle of a huge yield curve inversion right now, and we got the middle of the curve right now rising. And we got the short end and long end falling. The one I'm really keeping my eye on right now is the U.S. 30-year, because it's the only holdout in this yield curve inversion. We see that the 30-year has dropped 3 basis points today, but we're seeing smaller moves in the rest of the yield curve. The biggest move has been in the 30-year, with a over 3 basis point move today. We're seeing very little movement in the middle of the yield curve, and we're seeing a little bit more movement in the 6 month. The 6 month has moved 2 basis points today. But so we're still looking at this yield curve inversion stretching all the way out to the 10-year. We see the 10-year is I think right now is still lower rate than the overnight rate. At any rate, I haven't got the overnight rate on this list. It only goes to 1 month. But the whole thing is inverted right now. And this is a very dangerous signal for the upcoming recession. Let's take a look at the U.S. dollar index today. You see, it did a bounce down, and now it's coming back up. It's rising a little bit. It's at 97.12. Considering what the Fed's been doing for all this length of time, the dollar should be stronger. It should be over 100 right now. But now the Fed's going to start weakening. They're going to start lowering interest rates. This is going to have an effect on the dollar. And also, when these tariffs start to really bite, they start to really come in and be imposed. Now, the Mexican tariffs are only going to be facing 5% at first, but it's going to increase as time goes by. Every month, I guess it's going to go up 5% more. Until it reaches a maximum, I guess, of 25% on the Mexican tariffs. The Chinese tariffs are already all the way up there, And now, what do we got talking here? What do we got going on? Trump says that he is going to threaten China with more tariffs. He says at least another $300 billion worth of goods that they're considering tariffs. It says the escalating war of words between the United States and China. Overnight, President Trump threatened to hit China with tariffs of at least another $300 billion worth of Chinese goods, although he thought both China and Mexico wanted to make deals in their trade disputes with the United States. It says, our talks with China, a lot of interesting things are happening. We'll have to see what happens. It could go up another $300 billion. It says, I'll do that at the right time, he says. He told that to them before he boarded Air Force One at the Irish airport of Shannon on his way to France for D-Day commemorations. So they're still talking about doing $300 billion more of tariffs on the Chinese goods. And so this is going to, see, these Chinese goods are 25% tariff, and it's not coincidental that the Mexico's tariffs are going to be at 25% before it's all said and done, if this thing continues. This trade war is heating up. It's going to cause the entire world trade to slow down. Everything to slow down. We are already headed toward a recession. This is fuel for the recession, and as the months progress, this is going to become more and more clear that this is pushing the whole world into a recession. This lowering interest rates in the United States by the Federal Reserve, and also at the same time, they might have to go into more easy monetary policy. In other words, print money. Will this actually work to actually keep the United States from sliding into a recession? Because if this doesn't work, and the United States starts to slide into a recession anyway, even with them lowering rates, and even with them going back to some sort of stimulus measures, then a lot more is going to be needed. And you have to understand, my point of view on all this is that we're going to go there. That eventually this is not going to work, this medicine. I mean, we've already been through 10 years of zero interest rate policy by the Fed, and it wasn't working then. Why is it going to work now? Going back to this, when we're already headed toward, the whole world's headed toward a recession, I don't think this is going to be enough to pull us out of this oncoming recession. And by that time, we will have played our cards. So the recession's hitting, we've played our cards already. Then what are we going to do? What's the Fed going to do then? Well, they're going to have to resort to much more extreme measures. And these extreme measures is what I call, or what I like to call, the Great Print. So listen, thank you guys for listening. Like and subscribe and give me a thumbs up, and we'll catch you guys in the next video. Bye-bye.